Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. This is March 18, 2020 market update. Yesterday, the market miraculously escaped from the jaws of the FOMC meeting and Fed Chairman Jerome Powell, only to be bruised and bloodied by, you know what it is, the Treasury bills. The US 10-year Treasury rose to the highest level in the last 18 months or so, and it was as high as 1.75 and it closed at 1.713, but nonetheless it caused massive bleeding in the stock market across the board. So let's take a look at and see what happened. And here is the SPY, which had made a beautiful run up to the 4,000 mark, got beaten up badly, and just it was after lunch, a straight red line down the chart, going past the 50 point moving average, and the stochastic is at the bottom of the screen. However, I personally feel after it had made a nice move up here, it was time for some correction, and this is what we are seeing. I was looking at this, I thought it was going to be a flat ABC correction, but I guess the market never behaves as we want it to, so it made its own turn. It made like A, B, C, and C here. So we have a zigzag correction here in the S&P. I hope this is the end of it, and hopefully maybe it will turn around and try to make another attempt to go past 4,000 mark. So that is as far as S&P is concerned. Let's see what's happening with the Nasdaq here. Nasdaq is not so hot as S&P or diamonds are concerned, but nonetheless I feel like after making an impressive 20-point impulse wave, it had sort of established a trend line here at the bottom and at the top, only to be just broken today, and now it is below the 50-point moving average, and as I said, they all look like they were going to be like a flat correction, but it didn't turn out to be that way. Now we have A, B, C, and C correction. I hope this bleeding will stop here, and maybe the Treasury bills will come down and maybe have a better Friday, but being it a quadruple which day, it could be anybody's guess as to where it is going to go. My hope is, since it took like 3 days to cover this distance, this block, I'm hoping that maybe it will resume the uptrend, but it has a long way to go from 312. The highest where it reached was like 338. So that's quite a distance. It had gone up to 324, and it was like 14 points from its top, but now it has to catch up a lot of breadth, and that's where we stand. As I said, all the trend lines are above where the stock closed, but the stochastic is at the oversold position, and we'll see what happens. Tomorrow may be as unpredictable as today and yesterday, and hopefully maybe next week the Nasdaq will make some recovery and go forward. I mean, that's my assumption, so we'll see what happens. Dow Jones, again, it had a nice impulsive wave going all the way up to here, and it looks like a new trend here, but hopefully it is not. As you can see, it didn't reach quite the bottom here, which was diamond closed at 329.36, and it is above the 50-day moving average. It's somewhere in the middle of the Bollinger Bands as compared to the other ones. The stochastic is in the middle of the runway. We don't know which way it's going to go. So that's as far as diamond or Dow is concerned. We have to see. I'm hopeful maybe this is just part of the correction, and hopefully it will resume upward. tomorrow, if not tomorrow, perhaps next week. Next week, we have to see if the market will come to some grip and try to make another run for the high, especially S&P, which has been trying to hit that 4,000 target for 3-4 days now, and I'm optimistic it's going to do that, before any major correction that might be on the way. As many forecast experts are predicting, there's going to be a big correction coming up sometime this year, which could be testing the March 2020 lows, and we'll wait and see when it's going to unfold. Thank you so much for watching, and please do subscribe to our channel, and we'll see you next time.